Welcome to the Borderless Podcast, your guide to traveling, investing, and living beyond borders, where we talk about living the life that you want to live, where you want to live it.
Hello, and welcome to the Borderless Podcast, traveling, investing, and living beyond borders. This is James Guzman. I'm here in the beautiful San Miguel de Allende in Mexico, and today I am joined by Jason Hartman, and he is a genuine self-made millionaire. He is a successful investor, lender, developer, and entrepreneur. He is the president of the Platinum Properties Investment Network and Hartman Media Company, where he is the producer of 15 podcast shows, 11 books, and several newsletters. So thank you, and thanks for joining us on the Borderless Podcast, Jason.
Great to be here, James, and I'd like to say that all 11 of my books are on the New York Times worst seller list. I'm not much of a book marketer, I really like podcasting the best.
Well, it's amazing what you've done, and to give you an idea of some of the people that you've touched throughout the years. You've been doing this for a while, and
yeah, 10 years for podcasting.
10 years, wow. I remember. And I can't remember, I was just thinking about this earlier, I can't remember exactly when it was, but it had to be 6-7 years ago at least, maybe more, that I ran across some videos of yours in real estate. Because I was, I used to read a lot of the Rich Dad books. When I started reading them when I was like 14.
Right,
and,
yeah, that's a good start.
And I ran across some of your stuff, so I remember really enjoying your videos and stuff. So you're still going, and that's amazing.
Yeah, good. Yeah, thank you. I've been in the real estate business for many years, and it has created millions and millions of dollars in wealth for me, and I just love it. I think it's the most historically proven asset class in the entire world. I'm a huge real estate fan.
Yeah. So what are some of the reasons that you prefer real estate to other assets?
I think one of the most important things to understand, James, is that income property, and we should really distinguish and call it income property versus real estate, because real estate could mean anything. It could mean buying a home for yourself. It could mean a lot of different things. But income producing real estate as a specific type of real estate, a specific category, is a multi-dimensional asset class. And so what that means is that you don't just earn your return from one or two dimensions. For example, if you buy precious metals, you're buying simply a one-dimensional speculative asset class where you're hoping to buy low and sell high. If you buy a non-dividend paying stock, it's the same way. Buy low, sell high, one dimension. If you buy a dividend paying stock, it's two-dimensional, right? Buy low, sell high, get some income along the way. 2 dimensions, right? But income property is multi-dimensional. You get returns from buy low, sell high concept, cash flow concept, tax benefit concept, and it's the most tax favored asset class in America. I can't speak to how it plays around the world with taxes because it's so varied. And then you get your return from leverage. Which means you can control a lot more than you put into the investment. So, remember when we were kids and we might look at our shadow with the sun setting behind us, for example, and our shadow made us look really tall and really big, much bigger than we were. Well, with income property, you can be a lot bigger than you really are because you're really only typically putting about 1/5 of the money into the deal. So you get a 5-to-1 leverage ratio, right? And so if you put 20% down, you can control an asset that's 5 times larger, okay? So you have leverage. And then you have something I call, and I created a little trademark for this mouthful I'm about to spring on you. I call it inflation-induced debt destruction. And even though inflation is relatively low now, maybe 2 to 4% in real terms, forget about what the government tells you. And then, of course, around the world, some places inflation is actually very high at the moment. But I'm talking U.S., Canada, those types of North American markets. And so inflation actually pays your debt off for you. Of course, your renters or your tenants pay your debt off for you slowly, but inflation pays it off as well because you borrow the money when the dollar is at a certain value, and then it gradually declines in value over the years. And it doesn't have to be the dollar, it could be the euro, the yen, the yuan, any currency in the world, doesn't matter, right? The peso, doesn't matter. And so naturally, that currency becomes devalued. And so as you're paying the loan back, or really your tenant is paying the loan back, not you, you're paying it back in cheaper dollars. So it gets cheaper and cheaper to repay over time. And so I'll give you an example about this. Let's assume that there's a very moderate inflation rate wherever you happen to be in the world. Say it's just 4%, very moderate. And there's, of course, a big difference between what governments tell us the inflation rate is and what it really is. They always understate it. But let's just say it's 4%. And if you have $1 million in real estate loans, inflation is literally paying off $40,000 per year for you for free because you're paying those loans back in cheaper dollars. But with income property, we don't even pay our own debts. We outsource them to people called tenants, and they pay the debt for us. Plus, hopefully, they give us a little extra every month.
Yeah. No, absolutely. And I think in order to get very successful, then you need to learn how to use leverage. You can't use only your money. And I think that especially like 2008, these other times where people get caught up in these large take on too much debt than they can handle. That they kind of get scared away from it, and all of a sudden they say, "Oh no, I can't take on anymore. I just need to buy only what I can. I don't need to take on debt." Now, how would you?
Well, let's address that. That's a really good point that you brought up. So, in the Great Recession that we arguably are still in, some would say, but that's another argument for another day, which I'd be happy to have, by the way, because I think this recovery is largely smoke and mirrors. I am by no means one of those people who think it's over. I think there probably is another shoe to drop, but we'll see. But the people that got themselves into trouble didn't follow really any of my 10 commandments of successful investing. And one of them is, commandment number 5 is, thou shalt not gamble. And what that means when it comes to income property is that the property must make sense the day you buy it, or you just don't buy it at all. And making sense in the income property world means cash flow. And so the way we measure cash flow is by a rent to value ratio. We don't measure it in net cash flow because that would mislead us. If we did that, then we wouldn't be considering the type of financing we have on the property. I'm just strictly talking about gross cash flow here first. Of course, we measure net later, but as a quick rule of thumb, okay, just a rule of thumb, when you're looking at gross cash flow, we want to get 1% of the value of the property every single month in income. Okay, so that means if we buy a $100,000 property, we want to get $1,000 per month in income. Really easy, simple rule to follow. Anyone can do this. And guess what? I've been to 79 countries. I'm a huge avid traveler. I've been to some of those countries many times over. And, I don't count those. So that's 79 unique countries, I guess I should say, in the internet parlance. In doing that, I found that these rules apply pretty much worldwide. And so the people that got themselves into trouble in the Great Recession or in any economic bad time, they were typically buying based on speculation. They wanted something great to happen in the future that they really couldn't control in any way. They had no idea if it would really come true, right? And so they bought a property typically that looks something like this: a $600,000 home in California that would rent for maybe $1,800 or maybe $2,000 per month at most, okay? And in so doing, they did not follow the rule, because what's the rule? If I invest $600,000, I want to get $6,000 per month, 1% of the value every month. So that was buying based on speculation. We want to only buy properties that make sense the day we buy them. So very important rule to follow. Thou shalt not gamble. That's the name of the commandment.
That makes perfect sense. Are there any other rules or anything like that? I mean, maybe somebody that wants to start getting into this, maybe they want to buy their first income property and they want to be educated correctly. How would you advise them to approach getting educated on this?
Well, of course, I would say listen to my podcast.
Right. Well, you've got 659 there, so lots of stuff to learn.
There will be 660 episodes tomorrow.
Wow.
Because we publish 3 times a week.
And that's only one of the shows, folks. I mean, you got 15 there, so.
I know, but I've been doing it a long time. It's not like it all happened last year, okay? Mm-hmm. So, for the last 10 years, we've been publishing episodes there. the 10 commandments of successful investing are like the core content. Let me just share, James, a couple more with your audience and with you as well. One of them that's been really popular that really strikes a chord with people is commandment number 3. That basically says, thou shalt not. Oh, sorry. Commandment number 5 is thou shalt not gamble. I'm a little distracted here with Facebook messages popping up at me. Sorry. This one basically says, thou shalt maintain control. And what that means is that when we invest in something, let's just invest in our own deal, something that we own and control directly, not something that is part of someone else's fund or someone else's business or someone else's deal where we're a limited partner or an investor in it. We want to buy things as a direct investor, things that we can control, okay? I like to say that Wall Street is the modern version of organized crime, okay? And most people agree with me. No. Oddly, even my guests, James, that are Wall Street people agree with me when I say that. I think I'm going to offend them and they're going to start yelling at me for saying that, but they actually agree. It's a sad state of affairs.
It really is. Like, hey, what are you going to do about it,
Yeah, no, they're just part of a big, ugly crime syndicate called Wall Street, right? Yeah. And that's the way stock markets are really all around the world. Because when we relinquish control to somebody else, and I've learned this lesson far too many times in my life, sadly, we basically leave ourselves susceptible to 3 major problems. First one, we might be investing with a crook, okay? So when we're not a direct investor, we're investing with someone else who's in control of our money. And they could be Bernie Madoff. They could be Enron, WorldCom, Global Crossing, any one of these the scandals are like daily. You hear them all the time. Or they could be someone in a real estate deal who's just put together a little LLC, a limited liability company, and wants us to buy a share in it. Or someone who's doing a startup company or whatever, right? We don't have control. So first problem, might be investing with a crook. Second problem, we might be investing with an idiot. and either through their crookery or their stupidity, we could lose money. But let's assume we get past the first 2 hurdles. They're honest, they're competent. That's good news so far. Third problem, they take a huge management fee off the top for managing the deal. Okay? And we want those profits to go to us. I mean, there's no shortage of the Wall Street folks, because they're in the news all the time, who the company loses money, all the shareholders, all the stockholders lose money, yet they give themselves these big fat bonuses. It's disgusting. Mm-hmm. And that's legal. You can't do anything about it. It's just completely ridiculous. So if we own and control our own real estate, not investing in a fund, not investing in someone else's deal, we just buy a property and it's ours. We can still get ripped off. You could have a contractor rip you off, a property manager rip you off. It's not without problems, okay? You got to pay attention to anything. But the problems are so much smaller. I mean, the likelihood of having a big ripoff is just, it's a much smaller problem to deal with. So commandment number 3 really strikes a chord with a lot of people. Maybe I'll give you just one more. Diversify geographically. Take the most historically proven asset class, but diversify into 3 to 5 cities, 3 to 5 metropolitan areas, so that, there's an old saying in real estate, James, all real estate is local. All real estate is local. So I would say spread your risk, diversify into 3 markets at minimum, no more than 5. Mm-hmm. So if someone comes to my company and says, hey, I visited jasonhartman.com, I looked at the properties on your website, they look great, the projected returns are exceeding 20% annually, and that's really possible because it's a multi-dimensional asset class. I want to buy 6 properties. I've got, $150,000 to invest, right? So say as an example, they could buy about 6 properties with that. We would say buy 2 properties in 3 different markets, 6 properties spread around, and buy them in these linear, boring markets the markets you don't hear about on the news, not the speculative markets who have the big highs and the really ugly downturns and the really ugly lows where everybody goes under and has a hard time. Just buy them in nice, simple linear markets with good cash flow. Examples of these are places like Atlanta, Memphis, Indianapolis. Some of the Texas markets are getting kind of expensive. I would have said years ago we used to do a lot of properties in Houston, Dallas, Austin, San Antonio. It's a little pricey there now. We used to do Phoenix. It's a little too expensive. We've been in and out of Las Vegas a couple times. Doesn't work too well now. So that's actually another commandment. Be area agnostic. Okay, don't be attached to any one area. Go to where the deals make sense. But these good linear markets, they're boring, they're conservative, but it works.
Yeah. Yeah, I have a Borderless Network Facebook group, and somebody asked there the other day, what investments will give me the most freedom? That's kind of an interesting question. I just kind of answered that, well, you have to figure out what investments you like and learn about them. No matter, you don't want to just, send your money off to have somebody else manage it for you. You need to know about the asset class that you're going to be in. So that
you are absolutely right. Every investment requires attention. There is no such thing as a passive investment.
That's funny because that's exactly where our conversation went to. Yeah.
But passive investors, you know what they do? They lose money. That's if you want to lose money. Actually, let's not call it an investment. Let's call it a divestment. Like you're divesting yourself of your own money, right? Be a passive investor. Good luck with that.
Right.
That's just it's a myth.
Yeah, I wanted to ask you about that. You seem to be there are a lot of markets that you like in the United States. I had a renovation company in the United States, back in 2007 and 2008. Before I left, I actually left the United States in 2008. And I still talk to my partner. I was talking to him, had to be a week or two ago. And he was telling me that, man, this is like, he's got people coming out of the woodwork, that needing houses to be built and all kinds of stuff and having money. And that he's in Charlotte, North Carolina. And,
we've done a couple hundred transactions in Charlotte. I used to own there. That was a great market. It's not quite as good as it used to be.
Yeah. So he was just telling me it seemed to him it was like 2007, 2006, 2008 type of time period. It was just so many people with easy money there. Do you see it that way? I mean, is that just are different cities different, or is that something that you're seeing over the horizon here?
I'm not sure I understand the question totally.
Do we have another a bubble, a housing bubble in the United States, do you think?
Yeah, well, that's a good question. So I'm so glad you asked that. It's a perfect question. In the U.S., it's a huge country. In a country as large and diverse as the United States, there isn't any such thing as a national housing market. There are about 400 local markets. Okay. And all real estate is local, as we discussed before. So it depends. And you can divide these up to make it easy to understand. And this works all around the world, by the way. I'll give you some international examples of what I'm about to say also, okay? Because it's everywhere this is the same. That's one of the beauties about real estate. Conceptually, all these concepts apply across many borders, all right? I mean, they probably don't apply in Cuba, North Korea, or Belarus, but they apply in most places. Okay, so there are three types of markets: a linear market. That's the type of boring market that I like the best. I'm a huge fan of these linear markets, like Atlanta, Memphis, Indianapolis, those kind of places that I talked about. Then there's a hybrid market, which is a combination of linear and the next one I'm about to tell you about, which is called the cyclical market. Cyclical markets are the ones we all hear about on the news. They're the high-flying markets. These are the markets like Los Angeles, San Francisco, San Diego. Virtually all of California is a cyclical market. South Florida, Miami, South Beach, Fort Lauderdale, these higher-end markets. The northeastern markets, Boston, Washington, D.C., New York, those would all be cyclical markets. And cyclical, as the name would imply, is like a roller coaster. They go way up and then they come way down and do this. A linear market, since we're on video, it goes like this. It has little ups and downs, but it's not huge, right? And then a hybrid is in between the two, okay? So hybrid markets, as an example, would be Phoenix, I would say Atlanta's getting a little bit hybrid-y. Austin is a hybrid market. Chicagoland areas could be hybrid markets. So that's a breakdown of the three. Now let's talk about those internationally. You can just tell that cyclical markets, they're all the high flyers. They're all the famous cities around the world. And without even going there, you can just intuitively know this. London, Paris, Hong Kong, Tokyo. Well, Japan is kind of a different case because they've had the last 2 decades. But anyway, it is a cyclical market overall. And so these types of markets are very risky. They never make any sense. They never have good cash flow. They are very risky markets. So that's what you have to understand. So all real estate is local. I say invest in the linear, boring markets, or at least the hybrid markets that are the in-between.
Okay. So if those are some international markets that you don't like, say that somebody is thinking about...
Well, I mean, I like them. I think they're great places to visit. Just don't buy any real estate there.
but say that somebody is thinking about, we have a lot of people that listen to this show that are thinking about, they want to diversify outside of the dollar or outside of the U.S. They don't want to have all their eggs in one basket. Are there any other markets, maybe not even real estate, or it could be business markets or something like that? What would you recommend for someone that's thinking about diversifying internationally?
I think that there are really, before I answer that direct question, I think that there are really only 3 great investments in the world, okay? One of them is your own business, okay? So if you know your own business really well, and if you're good at it, and you're paying a lot of attention to it, put some money into it. I mean, that's you know, because you have direct control over your own business and you have a deep understanding, hopefully, of your own business. You know if it's going to work or not. And you can, by investing in your own business, you can get a good ROI, return on investment, okay? So that's the first thing. And I know you counsel people on this stuff. So, and we just talked about what's going on in Chile and so forth. So your own business could be a great investment. Maybe not right out of the gate. You want to kind of make sure it's going to work. But after you have a track record, don't be shy about investing in your own business. Number 2, and these aren't in any order necessarily, but the second one is income property, the most historically proven asset class in the entire world. I mean, we all know people who've created great wealth in real estate, in income property specifically, and we know it works. None of us seem to know anybody who did this in the stock market. I mean, we know of people like Warren Buffett and famous investors, Carl Icahn, T. Boone Pickens, all these big name people, but they're all insiders. They're not normal people. They're billionaire insiders, right? We know normal people who've made fortunes in real estate with income property, okay? And then the third one would be the paper generated by income property or by property in general. And that means mortgage notes, land contracts, contract for deeds, things like this. The paper investments can work pretty well. They're not as good as owning the actual physical property, but they do have an advantage. And you won't see the returns be as good on those, okay? In general, there may be an exception here or there, but by and large, you'll get much better returns owning the actual physical asset, the house or the apartment building. And I own apartment buildings, single-family homes, and I have one mobile home park. I have a part in that too, and those are great. But the paper has one advantage, and that is it's more passive. You can be less involved in that. Since you're not owning the actual physical asset, you don't have to deal with a tenant. You don't have to deal with insurance policies too much or property tax payments or things like that. You're just simply the lender on the deal, or you're buying the note secondhand and taking that lender's position. So that can be a little simpler, but again, the returns aren't as good.
Okay. So back to they're trying to get out of the U.S. dollar or the United States.
Yes, that was your question. Yeah. Sorry. I've never been known for short answers. Yeah.
No, but that's great. That's phenomenal, and I think that's great advice. Yeah.
No one's ever accused me of being short-winded. Okay, so to your question, let me ask you a question about that.
Sure.
why would someone want to get out of the dollar? What is the concern behind that? I'm curious to have you answer that first, and then I'll
sure.
answer.
Yeah, a lot of people they have different concerns, but a lot of people are they are worried about the stability of the U.S. dollar.
Right.
I saw that you had Chris Martenson on. I think
yeah, he's great. I love Chris Martenson.
So he was talking about a lot of the things that a lot of people are worried about, and it's just more kind of diversification, like you were saying. If you have 5 different areas that you're investing in, well, why not have them international, and then they're even more diversified. But yeah, I know people are worried about just kind of the direction of the United States, the dollar, and things like that.
Okay,
what do you think about that?
That's a great question. So the first question I would have is, compared to what? Mm-hmm. There's this concept, that people kind of love to bash the big player, right? The U.S. is the big guy on the block, right? The biggest economy, certainly the most successful country in human history. It's be hard to argue that. It's far from perfect. It's got tons of problems, but compared to what? Mm-hmm. I mean, like if you say, okay, well, I'm concerned about the U.S. dollar because it's not backed by anything. It's fiat money. Well, every currency is fiat money. And you know what? When people say that, they're actually delusional, I think, because the U.S. dollar actually is backed by something. It's backed by the largest economy in the world. It's backed by the biggest brand name in the world. There is no bigger brand name in the world than America, okay? But here's what it's really backed by when push comes to shove. It's backed by intercontinental ballistic missiles, aircraft carriers, satellites, and a huge military, the biggest military the human race has ever known. Mm-hmm. And, I know that may sound terrible, and it kind of does, but the oldest form of power is the ability to inflict violence. Mm-hmm. And certainly one could argue that the U.S. is imperialistic and, that I don't even know if we should call it the Defense Department anymore. It's more like the Invasion Department lately. We literally invade other countries. Arguably for moral reasons, and that's a whole nother discussion. I don't know, the answer to that. I've had John Perkins on my show, who's an interesting guy. You should interview him. Do you know about his work?
Yes, I read his book.
Confessions of an Economic Hitman. Mm-hmm. Yeah, and A Game as Old as Empire, and he's got a couple other books. Mm-hmm. Those are interesting. But so, the U.S. has the reserve currency. Granted, I know there are countries that do not like the way the U.S. throws its weight around. I don't blame them at all. They're trading outside of the reserve currency. But let me tell you, that's like a parent who lets their kids get away with a little bit so as to appear not too strict. But when push comes to shove and they try to get away with too much, it's not going to happen, okay? The U.S. is not going to let the reserve currency status go because it allows the U.S. to be totally irresponsible, okay? I mean, just understand that where I'm coming from on this is I'm not endorsing this. I think it's terrible, actually, okay? I'm just saying it's true, all right? That's all I'm saying. Yeah. And I'm saying that we should align our interest as investors with the most powerful forces the world has ever known. They are governments, militaries, and central banks. I don't really endorse any of those entities. Right. But the fact is, they run the world. And we're not going to do anything about it. So we might as well align our interests with theirs. So if you want to short the dollar, you know what you do? Buy a bunch of commodities and finance those commodities with dollars. And the best way to do that is through income property. Because think about it, I call this theory packaged commodities investing. Because when you buy a house or you buy an apartment building, you get this incredibly cheap, artificially cheap, 3-decade-long fixed rate debt. I mean, it's artificially cheap. These interest rates should not be this low. They're defying gravity. It's absurd. It's illogical. It makes no sense at all. Okay? But it's real. You can do it. Okay? So you buy these properties with 30-year fixed rate debt. And what are the properties made of? What are the ingredients of those properties? They're copper wire, Copper's a commodity traded globally. There, concrete, that's a commodity traded globally. Lumber, same thing. Petroleum products, glass, steel, energy. Okay, these are all commodities used by the entire human race, needed by the entire human race, traded in every currency on earth. Barter, dollars, yen, yuan, renminbi, peso, any currency you want, okay? They're traded in these currencies. And so you control those commodities with ever depreciating dollars. That's a short on the dollar. I firmly believe in that trade. I think it's a great trade. Yeah. And you get to short it for 3 decades at virtually no cost, because the ability to short it is really paid for by the tenant. We don't pay our own debts. That's the best short going. Now, as far as real estate internationally, I mean, I've looked all over the world. I remember when Romania and a couple other countries got into the EU about the same time. I went there and I went on a 5-country tour. I met with real estate people, with developers in all of these areas, and I looked at deals. And let me tell you, they are just not as good as they are in the U.S. The U.S. has a very special real estate market for a couple of reasons. Number one, housing has been subsidized by the government since the Great Depression. For over 7 decades here, through Fannie Mae and then Freddie Mac, we have had housing subsidized by the government. Number 2 reason, the market in the U.S. is very perfect. And what I mean by perfect is that there is widespread availability and understanding of data, comparable values. When I've looked at real estate deals around the world in Central America, South America, Europe, et cetera, what I've noticed, they have all these they call them off-plan deals. And they don't, in Australia, New Zealand, it's the same thing. They don't really have a multiple listing system that's very mature there. They do have little systems, but it's not like the U.S. at all. In the U.S., the data is really there. It's understood. I don't see any Zillow in these other countries or any Trulia in any real way in these countries. So you don't really know what the value is. The data it's not transparent enough, and I don't like that. The other thing is the supply chains are very mature in the U.S. So construction costs, oddly, are actually lower here than they are in third world countries like Belize and Costa Rica. It's amazing to me that in the U.S. you get a much better built property, a much better built home or apartment building than you get in, say, Belize or Costa Rica, for example, right? Or Nicaragua. And you'd think it would be cheaper there because the labor is it costs nothing there. But it's actually cheaper here in the U.S., oddly, because the automation and the supply chains are just so much more mature. Listen, I would love to be wrong about this, and I'd love to be wrong about shorting the dollar too, right. But I don't think I'm going to be wrong about either one.
Yeah, no, that's great, and I really, appreciate your opinion. A lot of people that we've had on have had the opposite opinion, so we love to hear some different points of view, and you've definitely made a good case for yourself.
Yeah, and just understand, I'd like to be wrong.
Yeah. So as far as the budgetary, a lot of people who talk about the unsustainability of the budget of the United States and stuff like that, that doesn't worry you, at least for the short term?
Well, here's the thing. Okay, look, when you have the reserve currency, when you have the biggest brand, and brand name is that's a significant part of it. When you have the biggest military, when you have the biggest economy, when you have those 4 things, plus a pretty unique piece of geography that doesn't lend itself to wars and invasions very well. The U.S. is surrounded by oceans, okay, and friends. So when you have all that going for you as a nation, you can kick this can down the road a long time, okay? Chris Martinson's been on my show several times, Peter Schiff, Jim Rogers, all the doomsayers, okay? And they all say, well, this is ridiculous. The government can't keep spending money and printing money. And listen, I agree with them. But the questions you got to ask yourself is, compared to what other country? Mm-hmm. Okay, the U.S. may be like this ugly girl at the dance, but all the other girls are uglier. Okay, so it's only a game of comparison. It's all relative, right? Yes, the U.S. has been massively irresponsible really ever since the 60s. I mean, it's just been absurd with all these social programs and all this. I hate it. I hate this stuff. I'm a libertarian. I can't stand the welfare state. Okay, I think it's absurd. Big government is anti-freedom. It's just not good. Okay, I had Austin Peterson, the libertarian candidate, on my show recently, and he was just endorsed by Rand Paul. And these ideas don't work because you can't get elected if you don't buy votes. And so the politicians who want to stay in power, they just dole out money to buy votes, and it's a disgusting cycle. I completely agree with you. But how much debt can the U.S. sustain? I'm going to say I bet a lot more because they can just keep creating fake money out of thin air.
Okay.
It's not fair. It's just true.
Right.
Okay.
Well, I'll definitely vouch for what you're saying about the information because, as somebody who, like I said, I was reading Kiyosaki's books. I was looking at your information when I was 16 years old. And I bought my first property when I was 20.
So did I. I was 20 also. Yeah, that's great. Awesome.
Yeah. But I learned a lot of the metrics that people use and, that you want to do to value a property. And yeah, when you're outside of the United States, that doesn't, if you ask for a trailing 12 or anything, the ROI on something, they're not going to know what you're talking about. And so that's definitely a challenge. I would agree with you.
One of the other things I want to tell you is when I've looked at property deals, like I remember I was looking in Panama and I thought Panama was pretty decent. Okay. And, so most of the properties outside of the U.S. that would qualify for investment or rental, they're condos. And I don't like condos too much.
Really?
Okay. I like the good old single family home is much better because as soon as you get into a homeowners association, you have a whole new host of problems. Okay. And that's just, there are just a bunch of issues there. So that's another reason that I like these just good old single family homes in the U.S. I mean, I don't mind if they have like what I call HOA light. They have these homeowners associations that are kind of minor, they're $20 or $40 a month, where they just make sure your neighbor doesn't repair his car on the lawn, and they maybe have a common pool. But I don't want to be attached to my neighbor. I like single family detached homes, far less problematic. So that's a significant thing. If you look anywhere in Europe, Central America, it's like everything you look at is a condo.
Yeah.
And that brings a whole new set of problems.
Yeah, and they like the homeowners associations also because, it's a security thing. You have private security there because you can't depend on the police usually.
Well, you can't depend on the police, and you have squatters.
Yeah.
I mean, in Costa Rica, every property, it seems like it has razor barbed wire around it, bars. And I mean, seriously, you want to live like that? I mean, that's no fun. You're like in your own prison. But yeah, they do that because when they leave their property, if someone comes in there and breaks in and squats, the squatters' rights are very significant.
Yeah.
In the U.S., you're not going to have problems like that. Well, unless you're in the Socialist Republic of California.
No, and that's definitely, folks, that's something you got to keep an eye out for is the HOA thing. I've been associated with a lot of HOAs. I've been involved. Ones that have just been starting, where I bought a brand new townhouse, and everybody's brand new homeowners, and that's kind of fun. But usually, very quickly, they start renting them out, and then the homeowners stop showing up, and then there gets to be a clique of people that kind of take over the homeowner association and keep jacking up the costs, and I've seen it get completely out of control.
And then they get kickbacks from the contractors, and then there's all kinds of corruption, and basically what you have is another government.
Yeah, Jason, absolutely. And I think it's an interesting study in governments, actually. Kind of a private government, but how it always grows and just turns into a disaster. I've seen it get so bad where here in Mexico, I was involved in this. It was a big apartment building, or it was condo slash hotel. And it was
and condo hotels are even worse than condos. So yeah,
it was literally like some guys got into debt to the mafia and were shaking down the whole building. I mean, it was a disaster.
Oh my God!
So it can get really bad, Yeah. So, anyways,
avoid those entanglements.
yeah. No, you're right. And that's you obviously have a lot of great information on ways to learn how to invest and stuff like that. So especially real estate. So for somebody that wants to, like I was saying before, maybe they want to buy their first income property, other than going to your 660 podcasts there. Yeah. Is there any kind of rule of thumb, or maybe should they get started on a book or something like that? I mean, how would they?
I would just say, like, look, if they want some sort of core content information, if they just go to jasonhartman.com and use the little search engine there, and they just type 10 commandments, if you follow my 10 commandments, you're really unlikely to get into any trouble. Okay. I mean, those are like the core. That's the core material. Okay. There's more to it than that, obviously, but the 10 commandments really are the core of real estate investing. And look, it took me years to come up with that, and a lot of my own mistakes and failures. So that's from the school of hard knocks. I've seen a lot of clients make mistakes over the years, because I used to have a traditional real estate company years ago that I sold to Coldwell Banker, and we had investors too. We weren't an investment only business like we are now, but we certainly saw people make a lot of mistakes there too.
Yeah. So for a person, say me for instance, 32 years old. Is that what you would recommend for somebody, in my shoes that wants to get started, and build their own fortune? Would be income property in some of those the cities that you mentioned, or how would what do you think is the best opportunity for young people that want to get in the market?
I think that's the best opportunity. You're going to need, if you want to do it our way, okay? I mean, there's an endless number of ways to do real estate investing, okay? And, you can find all kinds of gurus out there. A lot of them are crooks, so be careful. And crook is a spectrum. It's not an either or. Right. Okay. There's like are they this crooked or that crooked? It's a spectrum, right? And so just be careful. Don't give anybody a lot of money for some program or anything like that. Most of the educational material is free nowadays. My podcast is free. And just go out there in the world and look and find things and see who you believe in. And if they're asking for a lot of money for a coaching program or something, you probably do not need that.
Okay.
Okay. There's tons. Information is abundant and free nowadays. Mm-hmm. Okay. But I tell you, if you listen to my 10 commandments, that'll keep you out of trouble. You'll make good decisions.
I did want to ask you a question. I'm interested in your answer to this. Before you're talking about investing in yourself, investing in your business. As a person who has, all these podcasts, and you've written books and all this type of stuff, but I think that, you have made your money in the beginning through real estate. How do you look at things like podcasts or your own personal brand? Because this is one thing that I have trouble with sometimes is, how much should I invest in this stuff that I'm putting out, rather than.
Well, it depends on your return. I mean, make sure that you're getting a return from it now, and then if you put more in incrementally, can you grow that return in your business? Right. But I actually wrote a book, my first book, back in 2000. Okay, 16 years ago now, was on personal branding. It's called Become the Brand of Choice. It's on Amazon still in old print. I mean, we're not printing them anymore, but it's out of print, but you can get the used ones on Amazon. And I believe that developing a personal brand is very important. I mean, the hard part about it is you only get only one shot in life at a reputation. So protect it very, very well. In business, we all have things come at us that look like the greatest thing, and we can go for them. But if they seem too good to be true, they probably are.
Right. Yeah, and I think in today's day and age, with the internet and information so widely available, that reputation is paramount now, because if you do one thing, it can just go and haunt you for the rest of your life. Yep. But yeah, it's just something I've had trouble strictly quantifying, because a lot of times by your personal brand, by your reputation, you don't necessarily know whether it's book sales or whether it's speaking or whether it's somebody that asks you to help them on some business deal or whatever. That could be a return, but it's not real. Sometimes it's not exactly tied into that. So I've just Anyways, it's something.
I don't, I mean, these are complicated issues that we all need to evaluate ourselves, right? So I don't know that I'm going to be able to answer that in the time we have, but sure. I think your own business is a good investment, and build your brand, provide value, and get it out there in the world and scale it up. Okay. I mean, that's really that's what business is all about, right?
Absolutely. Yeah. All right. Well, I will let you go. I know you're very busy, and thanks so much for your time. This has been great talking to you. And I'm sorry. Please direct people to where you have jasonhartman.com, and if you have anything coming up or any books that you'd like to let them know about.
Yeah, absolutely. Well, books. Remember, I suck at books, right. So I'm not going to recommend any books. But I'm really prolific in the podcasting world, and we have huge followers in 164 countries. We've been podcasting for a long time, and just have great success with podcasting. So you can find my podcast on iTunes, Stitcher Radio, SoundCloud, all the usual places. Just type jasonhartman.com. My most popular show is the Creating Wealth Show, and that one is the one with, as of tomorrow, 660 episodes, and we've interviewed some very famous people on the show, lots of presidential candidates, lots of big business people, some great insights there, and I love podcasting as a way to learn because you really get deep, thoughtful content, like we've discussed here today. Mm-hmm. I hope your listeners feel that way, and there's a whole world out there of people willing to provide exceptional value to you. Don't pay a lot of money for it, okay? You have to pay a little bit, go to some conferences and things, but just don't overdo it, okay? Be conservative with your money so you can use it in your business or your investments. And jasonhartman.com is my real estate website. My podcasting company is hartmanmedia.com, and you can find either of those or on all the podcast platforms. So thanks again, James, and happy investing to you and your listeners.
Okay, thanks for coming on.
Bye-bye.
All right, so what did you guys think about Jason Hartman? Very interesting, a very different perspective than we usually have here on the Borderless Podcast. What does he say? He says real estate, income-producing real estate in the United States. He names several different places, things to look out for. What do you think? Do you think that the United States is the place to be now? Well, for real estate at least. Let me know. Let me know on the Borderless Network Facebook group. Also, you can just comment on this video. As you can tell, this has been a very different Borderless podcast than there was just 2 weeks ago. I'm going to keep pushing. I'm going to keep trying new types of guests, new types of information and opinions. And, let me know what you think. All that I hear so far is I like it. Keep going. So I'm going to keep pushing. So right now, this podcast, this is me, this is my journey for talking to new people, and I'm very glad to have you with me, and I'm happy to have all the people that listen to this, that join me and interact, and we have this whole international network. So I hope you enjoy this information. I hope you enjoy the stuff that I continue to bring. So if this is the first time that you've heard this podcast, please go to borderlesspodcast.com and get on the mailing list. Then you'll be able to join us on the Facebook group. Then you'll be able to get on our mailing list where I give out all the new podcasts, all the new blog posts, and all types of different types of offers and stuff like that for the Borderless, the global network of entrepreneurs and investors. So thank you very much for listening, and I will catch you next week.
Thanks for joining us for the Borderless Podcast, traveling, investing, and living beyond borders.